Hey, how's it going, everyone? Uh, Today's topic is trend analysis, and I'm going to talk about giving you a brief overview of what trend is all about and how important it is when you study a chart and want to make a decision based on what you see on the chart to buy or to sell a stock. So, this is a subject that is very, very important to understand. So, trend analysis, what is a trend? Trend is a friend until the time it decides to bend. This is an old proverb that every trader uses. And if you have to make some money in the market, the first thing that you need to understand is what is a trend. So, what are we going to cover in this class? I'm going to try to provide you the quick overview of the concept of what the trend is, what are the types of trends and their impact on price. We will try and help it identify the trend using technical charts. And then using that analysis that we have made, we will try to see how we can make trading decisions that that are influenced by what you see on the chart and what you perceive as a trend. And in the last section, we are going to qualify your understanding by going through a little quiz that is set up to try and help you grasp and try and consolidate the learning that you've taken from today's class. Let's go without wasting any further time. What is the importance of trend? Well, trend indicates a general direction of the price movement in the market. When you want to make money from the market, you have to follow the tide that the market is showing. You cannot make money if you're going against the trend. So if the price is moving from high to low, you sell high and then you recover back at a lower price. Now that's a little taking a short call, but that happens in a futures trade. So let's not get into that. But if you're a regular trader and if you see that the price is moving from the bottom to the higher levels, then the simple concept in the market is to buy low and sell high. So if the market is in an uptrend, that's when as a buyer you step in and you expect that the price is going to go higher. So you buy now so that you can sell later. Prices generally flow in a trend, and as the smart money moves the market to make profits, the strength of the inflow or outflow of the funds and its volume causes the price to trend. What causes the trend? Well, retail traders like us will buy 100 shares, 200 shares, 1,000 shares, 10,000 shares. Nothing, that's not a major quantity, and at times that's not the amount of quantity that one trades and can move a market. Basically, trend is created by the money flow that is introduced by big institutions and pension funds, banks, HNI desk. These are the kind of people who, decide that the price is undervalued, and that's how they start pumping in money into a particular stock or a commodity or any asset class that we talk about, and they cause the price to go up. So smart money means the money that is being invested by these kind of people who've got a huge amount of money in their pockets and they are willing to put that money in the market and make a move. So basically, they're the guys that if I give you an analogy, they are the guys who make the tide and the waves that flow in the sea, in the market. And like you want to like an ordinary person, you want to surf in that tide and you want to flow according to what the water is flowing. And that's what the trader has to do. He has to flow along with the waves that have been created by these big guys, and we as small guys and retail traders, we have to just follow that tide and be in the flow, and that's how we make our money. What else? A trend can be primary trend, a secondary trend, trend can be a primary trend or a secondary trend. Primary trend is the one that's on a long-term basis, and a secondary trend is something that's within that long-term trend. Now, when you have a long-term trend, the markets never move in a single line. They will go zigzag, they'll go up and down, up and down. But the major momentum of the market is in a particular trend. So that is the primary trend. And secondary trend is within that primary trend. There are ebbs and flows, like you see in the waves. You see the ups and downs. So the ups are the uptrend and the downs are the downtrend. But those ups are the ones that are the dominant factor, and the downs are, the just they're the ebb and again the flow. So so having understood the importance of trend, let's try and understand the types of trends. But basically, there are three kinds of trends that one can observe on the markets. The first one is called the uptrend, where the prices flow from the bottom to the top. So prices are generally low and they keep on moving higher. That's a kind of an uptrend. And on the contrary, when you see a downtrend, when the prices are higher and they trend towards going lower, and that's what you see over a period of time, and that's called a downtrend. And the third kind of trend is a sideways trend, where the prices neither are moving up nor down, and the buyers and the sellers are in a balance, and there's no significant movement in the price. They keep on moving in a range, and generally the market is in a balance, and that's what the type of trend is. Now, how do we define them on a chart? So this is an example of an uptrend. Now prices move, like I told you, in a zigzag form manner, and the significant highs and significant lows are called swing highs and swing lows. And when you see those swing highs and swing lows come in a pattern, is when that's the way the trends are defined. So when you see a high and then the next high is a higher high, and the corresponding two lows are low and a higher low, and the pattern continues, is when this pattern continues over a period of time. This is defined as an uptrend. On the contrary, when you see highs and then lower highs and lower lows, and a pattern develops where you see a series of lower highs, and lower lows, that is a way a downtrend is defined, where the prices are moving from the top to the down, and that is how a downtrend is defined. And then the third type of trend is a sideways trend, where there's no pattern of the higher highs and higher lows, or lower highs and lower lows, and the highs and the lows are random and all over the place. And this is where the type of trend here is called the sideways trend, where the buyers and sellers have no significant direction, and the price moves in a broad range, and there's no movement, and there's no basic trend that can be visible. These are the three type of trends that one can see. So, having understood the types of trend, we'll take a trend narrative brief. So, a higher high and a higher low shows us an uptrending price movement. A lower high and a lower low shows us a downtrending price momentum, which is representing a downward trend. And a random occurrence of highs and lows, not following the above two patterns, shows a sideways move with no significant movement on either side. Now let us try and understand how trends can be used to create trades, to take trades in the market. So the ways to take a trade in the market in a trend is by observing where are the higher highs and the higher lows, and treating the breach of the previous the next high and the retest of it is where you get entry. So let us try and understand, take this as a scenario. Now here what we see is there was a previous high, prices went down, and then they returned back, and they breached this level of previous high, and then the prices trended higher. And what happens when price reaches a old resistance becomes a new support, and the prices tend to come down to that support and then take support from there and move higher. So this is the way the entries are. To retest, the entry is taken, and generally you book out with a profit at the next high, and then you let the price, if the price goes up, you let it go up, and if it tests back, you again take an entry, and hoping that because it's following a pattern and it's supposed to go higher according to the old pattern that we see, you let it rise, and as it rises, you book your profits at the next expected high. When that swing high is broken, you again use that swing high as the next level where you can enter on its retest, and you enter again and expect that the price will bounce from there, and then you try to book out at the next resistance. This is the way an uptrend is traded. In a similar way, the downtrend is traded in the converse, where when an old high is breached to the downside, that's called a breakout, and as the prices go back to that level, it acts as a resistance, and it shuts the prices down, and then again that high is retested, and it breaks another swing low, and as it breaks the swing low, the prices again go back to that swing low as a retest, and there you initiate your next trade. As a significant swing low is again broken, when the prices go back to that swing low, that area again becomes a resistance, and the prices again break down from there. So the trades are taken on the breach of these areas where there was once a resistance, and then that got broken, and there was a support, it gets broken, turns into a resistance, and that's where you take the trade. What do we do in a sideways movement? In a sideways movement, you see that there's a broad range in the market. There are highs and there are lows, and the prices keep on fluctuating within that area. So until the price, like you see here, breaches, you try to keep on betting yourself by going short at this high point and then entering again for your buy trade at the low level, exiting at the high point, and generally the highs are equal. So you find that it becomes easy to trade a sideways movement. You expect the prices to reverse from the last high, and they go back to the low, and they again bounce back from the high, and they go back to the low. And the trend is broken when the last low, the low that the multiple lows at the same level were taken gets breached, is when the trend gets broken. So these are the ways to you know trade treat these are the ways to trade the uh, create setups when you identify a trend. So why is it important to identify a trend? Because once you identified the trend, you know what and where to take the trades. That is the importance of finding the trend. So friends, we've come to the last stage of this class, where having given you the understanding of what is a trend, what types of trend that you see, how are the trends defined, and what are the definitions of the trend, the higher highs and the higher lows, and the higher low, higher highs, lower highs and the lower lows, and a random collection of highs and lows are how you define a trend. So let's take a small quiz to see your understanding of what we just learned. So quiz one says you have a chart here which gives you various swings which are seen in the chart. So the question is, what kind of a trend do you see in the shown chart? I would like you to, I'll give you 5 seconds to answer this question. What kind of trend do you see in the shown chart? You see a series of swing highs and you see a series of swing lows. This is a trend, this is a chart of TCS on a daily time frame. So I guess you guys must have made up your mind as to what this looks like. So let's see what this looks like. And here goes. The answer is that this is a downtrend where you see highs, lower highs, low, lower low, lower low, lower low. So this is an example of a downtrending stock. I hope you guys got it right. Let's go to quiz number two. Quiz number two basically shows you another pattern, and actually, I've given you an answer. So here's the quiz number two. I'm sorry, I've already given you the answer, but I mean it's pretty evident. It's not in rocket sciences. You see higher highs and you see higher lows here. So this is an example of an uptrend. Higher highs and higher lows. That's an example of an uptrend. Now this is one more. Quiz number three. What do you see in this? And what kind of a trend do you see here? Not difficult to guess. We've covered the high uptrend and the low trend. So this is a sideways trend where you have a random pattern of highs and lows, and you can't significant. There's no pattern to the highs and the lows, and this is what you call a sideways trend. So I hope with this you guys have understood what trends are, and how you can take advantage once you analyze what the trend is and how the setups evolve. Well, this is a very brief introduction to the topic of trend. Every subject when you talk in the market has, you can talk about it, and there's no limit to what you can talk about it, and there are a lot of nuances, and there are a lot of more in-depth subjects that when you talk about any subject, you can go to a lot of depth to understand there. So there's a lot to understand in the trend analysis chapter, but this was just a beginning and gives you a brief overview of what the trend looks like. And if you want to know more about what depth you want to go, understand more about the trend, you will need to do a little more study. So I'm Manoj Maheshwari. I'm a technical analyst with experience of 8 years, and we have a lot of videos like these. I'd like you to go and subscribe to my channel and have a look at my videos. And if you like the content, please press the like. And there's one more service that we gave. We have a Telegram channel where we release trade ideas based on the studies that we are talking about here, and you can go to those trade ideas and you can analyze for based on how those trade ideas were curated. Every now and then we have videos to explain how those ideas were curated, mostly on the weekends, and we give you a basic understanding as to what helped us create those ideas. Well, the ideas work or they don't work is a different matter, but there's a base, and most of the time the ideas will work, and most of the time they will not. The market is, you cannot be 100% sure that an idea is going to work or no, but trading is a game of high probabilities. If out of 10 times, if 5 or 6 or 7 times your trade ideas work, uh, you should be happy with your analysis. So you can visit us at our website, and you can sign up for the Telegram channel that we have, and you can look at the trade ideas. You can also take trades based on your understanding in consultation with your financial advisors, and hopefully I shall see you on the channel again, and I hope that you will join us and take your learning further. Thank you for giving us this time being together. Thank you.